Hello, everybody. Welcome to Intermediate Accounting 17th edition video solution walkthrough. This is for Kiesel, Weingen, and Warfield. This is for exercise 19.8. The question used in the presentation is copyright 2019 by John Wiley and Son. The authors are Don Kiesel, Jerry Weingen, and Terry Warfield. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within the presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Let's get to it. Okay. So right over here for exercise 19.8, so we're going to kind of follow the same steps we've been doing before. And the first step that I want to go ahead and do is I want to go ahead and record. Assume there were no temporary differences prior to 2020. Prepare the journal entry to record income tax expense, deferred income taxes, and income taxes payable for these 3 years. So the way we're going to do this is we're going to go ahead and take income taxes, income tax expense current for 2020. And this is going to be 830,000 times 0.2 or 166,000. So I'm taking 830, which is the taxable income, multiplying it by 0.2. And so right over here, or the next thing we're going to do is we're going to do income taxes payable. So our income taxes payable is going to be the same amount. Now, when it comes to deferred tax liabilities, right over here, we're going to take 30,000, which is our temporary difference caused by the excess depreciation. This is going to be $6,000. Over here, our other temporary difference is excess warranty expense on the income statement. What does this mean? Well, we've recorded a warranty expense, but it hasn't happened yet. So this is also going to be a temporary difference. So this is going to be a deferred tax asset. And this is going to be 20,000 times 0.2. Now, for this last part over here, we're going to have income tax expense deferred. And this is just going to be our whatever we need to do to balance. In this case, we need a debit. So I'll go ahead and show this here. Note on the Kiesel text, they're going to show the total income tax expense is 168. But when we go and look at future periods, this is going to be something we're going to want to take a little bit of a closer look at. Let's go ahead and jump over to 2021. Okay, so for 2021, we're going to go through and do the same process. So right over here, our income tax expense current is going to be 880,000 times 0.2. Over here, income taxes payable are also going to be the same amount. The deferred tax liability is going to be 40,000 times 0.2 or $8,000. Over here, our deferred tax asset is going to be 10,000 times 0.2 or $2,000. So as we look over here, our income tax expense deferred is going to be what we need to do to balance our journal entry. So this is going to be a debit for $6,000. Again, you'll see the solution in the textbook showing 182, but I'm breaking this out for a very important reason. 2022, let's take a look at that. So for 2022, make it a little bit nicer. Okay, so for 2022, we're going to do the same thing. 943,000 times 0.2. We're then going to over here say, well, our deferred tax asset is going to be 8,000 times 0.2. Our deferred tax liability is going to be 10,000 times 0.2 or 2,000. So to balance, we're going to have an income tax expense deferred of 400. So over here, I've balanced and whoa. Okay, so we're good to go with this one over here. So let's go ahead, assuming, so these are going to be my journal entries. How will deferred taxes be reported on the 2022 balance sheet? Well, my deferred tax asset is going to be collectively 4,000 plus 2,000 plus 1,600. My deferred tax liability is going to be 6,000 plus 8 plus 2. So this is going to be 6,000 plus 8,000 plus 2,000. So my net non-current tax liability is going to be my tax asset, or my tax liability less my tax asset over here, or a total of 8,400. Okay. So we can just also call this deferred tax liability. And there we go. All right, let's take a look at the next one. So prepare the income tax expense section of the income statement for 2022, beginning with the line pre-tax financial income. So pre-tax financial income for 2022 is going to be 945,000. And this is why I split this up like this on our numbers, just to make it a lot easier on us once we get to this point. So our income tax expense, current income tax expense deferred. And let's make that a little bit smaller. Why don't we do that? Okay. So this is going to be, so my current is going to be 188.6. My deferred is going to be 400. So my total income tax expense is going to be right over here at 189. So my net income is going to be 945 minus the 189, or 756,000. So that is this question. Just a few different things. When I first looked at this, I was doing it like I was trying to basically come up with T accounts. I'm looking at just follow the way that's being done over here. I'm learning this for the first time I'm learning it for the first time in some time, because it's been a while since I've dealt with this. But as I'm going through and learning this or relearning it, I'm kind of noticing some patterns, and the most important thing you can do is, the first thing, always take the taxable income, record the income tax expense current and the income taxes payable, then deal with the liabilities and assets, and then whatever you need to do to balance is going to be deferred income tax expense, either as a debit or as a credit. If it's a credit, it's going to reduce the income tax expense. So there we go. In any event, I want to thank you for joining me here today. I also want to as always, I want to thank Wiley for allowing me to share these solutions with you. And Wiley, unlike some other publishers, has been very generous in allowing me to do this. I have asked for years from other publishers to allow them, or to allow me to present their solutions, and they're saying absolutely not, while all their stuff is plastered on Chegg. So go figure. In any event, have a great rest of your day, and I look forward to seeing you on future videos. Have a good day.